I've been called a tech visionary. I'm a founder of multiple tech companies. First business at the age of 16, I sold it a few years later to a larger IT company. I founded Easy Employer at 22 years old, which is now a seven-figure revenue business with staff and clients all around the world. I'm the director of the Technology 360 Group, also advised about 6 other technology companies. Been investing in trading for about 10 years in multiple asset classes, and I'm more than 20x my digital asset portfolio to multiple 6 digits since 2017. Passionate digital asset enthusiast and cryptocurrency educator. Spend most of my time now as the head of tech and strategy and the CEO at Breakout Solutions, and I'm also do some work under the name of the crypto consultant, which is more targeted to assisting businesses to leverage this space. Just quickly on Breakout Solutions, we are a growing team of experienced professionals from a range of different industries who are all crypto enthusiasts. We essentially do the hard work so that you can leverage digital assets to benefit you, your business, and your family. Our team consists of researchers, analysts, coaches, consultants, and solution implementers, and we are definitely focused in the investment and capital efficiency space at the present, which you'll learn a little bit about more today. And our team essentially provides education, research, support, and a bunch of tools around automating investing. And we're in the process of preparing our B2B blockchain solutions, and you're going to hear a little bit about that today as well. Important to note, we are a mission-led organisation, so our mission is to help 1 million people reach financial independence by the year 2032, and we've just launched our Financial Freedom Foundation to help people in underprivileged countries to benefit from financial literacy and this emerging space. So let's just characterise crypto a little bit first. So there are different ways to perceive this, I suppose, or interpret it, but you can kind of consider crypto, I guess, as the whole market, but it's split into so many different industries and segments. It could be real estate, finance, record keeping, gaming, and inside that you've got segments. That could be infrastructure, applications, DeFi or decentralized finance, metaverse. Then you have all the technologies, so the cryptocurrencies, the smart contracts, the tokens, whether it's fungible or non-fungible tokens, more on that soon, and many projects which really aren't even decentralized at all. And yes, there is a bunch of gambling and speculation and stuff in the space, so you need to know how to avoid that. But really, it's the underlying technology that is the most important thing, and that is the distributed technology known as blockchain, of which Bitcoin is just one application of that. In fact, it's just one application of a cryptocurrency, which is an application of blockchain, and just happens to be a very sound form of money and a good store of value, which I'm going to prove to you in a sec. So what underpins blockchain? This will be the only theoretical slide I have here today, so just bear with me. The 2 most important elements, I would say, is firstly distribution, making sure that that is distributed off many computers, so there isn't any single point of failure, and that it is decentralized, and that it's not owned or controlled by one big entity or just a few entities, so that ownership structure needs to be really split as well. Encryption is very important. It's all about tokenization, which is just splitting things up into tiny digital bits, and immutability just means that the history of the blockchain is preserved, so you can't go and rewrite history, you can't hack it, it will preserve its history moving forward. Very critical component. So let's just talk a little bit about how Bitcoin works, because this will really kind of explain how the decentralized aspect of it works. So if I want to send money to you in a bank account, that just goes from my bank account to your bank account, but I don't know if you know, but it takes days for that to actually settle through the system. With Bitcoin, if I transfer money to you, it goes through the decentralized network. So what does that actually mean? It goes out, that transaction goes out to a whole bunch of different computers on a network known as miners, and they'll be frantically trying to solve a cryptographic equation in order to be the first person to solve it, and if they do, they get a reward. They get a reward in the form of Bitcoin. This is how new Bitcoin comes into circulation. It's called minting, and they get the privilege of writing the new block of information and transactions over to the next block before, and then it just keeps on going, block after block after block. Once they write that block, it's then transmitted to the rest of the network, so they can all double check the work and make sure that it wasn't a fraudulent block, and only then does that money get received. Now, in general, this will take 5 to 15 minutes. It doesn't matter if you're sending $1, $1,000, or $1 billion. It'll still take the same amount of time. It costs you, maybe $3 or $4 or whatever it is at that time. And if you think that's not fast enough to buy a cup of coffee, you're probably right. The Lightning Network will be able to do it near instantaneously. One of the most important points I want to get across to you today is how important blockchain technology is going to be, I think, for the human race as a whole. There are 3 revolutions that are being empowered by this technology. The first is the monetary revolution. So this is largely around Bitcoin. It is the only self-sovereign form of money that exists, and it is starting to displace government-issued money known as fiat currency, Australian dollars, US dollars, etc., and also traditional monetary policy organisations like the Federal Reserve. More on that in a minute. The financial revolution, this is where we spend a lot of our time. So this basically platforms and services that are empowering a whole new, efficient and transparent financial capability. It's more accessible, it's less costly for the individual, and it basically gives people a chance to own part of this infrastructure. And I'll come back to this again. This is displacing traditional financial intermediaries like brokers, agents, and all the other rent-seeking parties that sit in the middle of the financial structure that you don't realise you're paying fees to. Last but not least, in fact, probably the most powerful one, is the internet revolution, also known as Web 3.0. This is creating the user-owned internet, okay? This is how the internet was supposed to be in the 90s, where people could create their own information, monetize it, have control over it. And as you know, the big Web 2 companies, Facebook, Google, Instagram, all the rest of them pretty much took over the space and own all the information in the space. So this revolution will help to fight censorship, eventually preserve privacy and enable individual sovereignty. And this is going to displace those Web 2 intermediaries and to some extent help to fight authoritarian governments and other similar regimes. So you might be thinking, why do we need a monetary revolution? It's fine, I'm getting paid, everything's all good. Well, you don't have to look too far. In fact, I can spend 2 hours talking on this topic, but I'm just going to highlight a couple individual things. Just look at where inflation is currently. It's almost like 8.6% more to eat food in your house, 38% more to fill up gas. Electricity's gone up. Has anyone noticed everything started to go up in price? Okay, if you haven't, it means you're very well off financially if you're not noticing it, because it's definitely happening. I do pay attention to it because the CPI that you get reported is a manipulated number. It's a lot higher than what is actually basically broadcasted to you. Now, businesses are also going to suffer from this inflation as well. This was a survey from Gartner.com where they basically polled a whole bunch of CFOs and said, what's the biggest risk to input price inflation? And that's basically the price of all the goods and services a business needs to operate going up in cost. And of course, lower profitability, well, not of course, but it was the highest polled answer, 74%. So you're all business owners here. Can you imagine what happens when your profitability starts to get eaten away, all the problems that that's going to start to create? Now, again, there's so many points I can talk about how broken the financial system is, but it's not the purpose of today's talk. But I do want to highlight, why are we here? Why does inflation exist? Is it the war? Is it the supply shocks? Is it some random politician over here? What is it? Inflation is really defined as an increase in the money supply. They've just redefined it a couple of times to pull the wool over our eyes. If you look, this is the Fed's balance sheet. So this is the US dollar, basically, and how many of those are in existence. In 2008, they created a wonderful thing called quantitative easing, and there was about $3.6 trillion printed in about 6 years. But have a look at what happened at COVID. In 2 years, 5.1 trillion, or 56% of the whole US dollar circulation was printed in 2 years. Do you think the value of that dollar is going to go down a little bit? Do you think the purchasing power might go down a little bit? This is what's happening with inflation. This has been going on for ages, guys. So this is ex-British politician Godfrey William. Most of the problems start in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, but counterfeiting by any other name, the artificial printing of money, which if any regular person did, they would be locked up in prison for a very long time. Yet governments do it all the time. Central banks repress the amount of interest rates so we do not have the real cost of money. Sounds like that was reported yesterday. That was actually back in 2013. So it's been going for quite a while. It's kind of exactly the reason why Bitcoin was created. Okay, is a response to the great financial crisis and the financial world's reliance on banks as intermediaries of all financial transactions. In fact, there's a quote here from Satoshi Nakamoto, who created Bitcoin, who said, "The root problem with conventional currency is all the trust that's required to make it work." We heard about zero trust earlier today. The central bank must be trusted not to debase the currency, but the history of fiat currencies is full of breaches of that trust. In actual fact, Bitcoin is the best representation of money that has ever been created. This is actually from Goldman Sachs and looks at the 7 attributes of a successful money, I suppose. And you've got durability, divisibility, fungibility, which means it can be used with each other. Divisibility, obviously, you can't go and carve off a bit of gold and pay for your coffee. Portability, obviously, you can't take a whole bunch of gold on a plane. Verifiability, Bitcoin can't be hacked. It's got scarcity as well. It's limited to 21 million. The only thing that it doesn't really have yet is the track record, in that it just hasn't been around long enough to really cement itself as the best form of money. But these things take time. Decentralized finance, I talked about the financial revolution. We spend a lot of our time in this area. It's one of the most powerful applications of blockchain technology in our view. It is part of the next evolution of the internet and finance, and it's using blockchain technology to empower a whole new set of financial capability. It's very efficient, it cuts out the middleman, therefore less cost, more profit. And a lot of these protocols, especially the ones that, legitimate ones that want longevity, are sharing some of those profits around to the users that actually use and own the protocol, okay? Very important point. It's part of what's creating the biggest shift of wealth since the internet. And the cool thing about it, can be accessed anywhere as long as you have an internet connection and a mobile phone. So this is why we're now able to go into some of these lesser privileged countries and help them, because they just have phones and internet. That's all they need. Still early days. It's still somewhat experimental. Yes, there's still issues with it. We talked about cybersecurity. There is hacks and all the rest of it, but the potential is huge. We've already demonstrated that with some of our clients in Breakout Solutions. Let's have a look at the potential growth. So in 2021, DeFi market was valued at about 11.78 billion, and it's expected to grow at 42.5% for the next 8 years. This means it'll be valued at 231 billion, a 17x growth in the next 8 years. That's pretty big, a lot of growth coming. Now, the adoption has increased due to DeFi's ability to eliminate the intermediaries in the financial process, as I highlighted before. Last but not least, I talked about the internet revolution. That's Web 3.0. Well, what is it? Well, I think everyone's old enough here to have been around in the 90s to be using the internet. We had Netscape and AOL and all those crappy applications. So that was all part of Web 1.0. I was only just kind of young enough to use those, but I definitely did. So it was all about desktop browser access. It all had dedicated infrastructure. It was kind of view only, you could only consume stuff. And then we had the magical creation of Web 2.0, all social networks, everything on mobile phones, cloud-driven computing. This is everything that most people understand today. That is Web 2.0. Web 3.0 is now where it's going. So this is artificial intelligence-driven services, decentralized data architecture, of which blockchain will definitely be playing a role in that, and edge computing. In fact, any transaction with a middleman is going to be disrupted by the blockchain. And we're already seeing this a long way across the board. In smart contracts, you've got digital rights, escrow, trustees, wages, digital currency, e-commerce, global payments, remittances, lending, borrowing, microfinance. In record keeping, healthcare, title records, ownership, voting, intellectual property. Massive space going to be disrupted by NFTs, which I'm going to get to in a minute. Securities, equity, private markets, debt, crowdfunding, derivatives. These are all being significantly disrupted as we speak. Now, we do two or three YouTube shows every week where we talk about adoption, and there is so much adoption coming at the moment, you would not believe it. Dominica choosing Tron as the coin, 39 ATMs worldwide, UAE moving into the Ministry of Economy, moving into the metaverse. 74% of Latin Americans prefer businesses that accept crypto, 320 million users in this survey. Nearly 75% of retailers plan to accept cryptocurrency payments in the next 2 years. I'll get back to that one. 4,000 NFT trademarks. In 2022, you can buy a condo in Canada with Bitcoin. Central African Republic becomes the second country to adopt Bitcoin as legal tender. No one wants to be first and no one wants to be last. Watch the others that come after it. Swift partners with Chainlink to implement that in their solutions. That's huge. And you've got all the institutions, Deloitte and all the big four, also bringing these services to their institutional investors as well. Just put your hand up if you're a little bit more knowledgeable on Bitcoin and blockchain and its potential now. Okay, cool. That's pretty much my job done. See you later. I've got a little bit more to go through. So the point of the talk was, well, how does this actually benefit business? And it's a good question. So I went back to fundamentals and said, well, what's business typically about? Well, it's typically based on creating profit and capital appreciation. So I then broke it down into 4 ways. You have creating new revenue, so bringing new revenue into your business, preserving existing revenue. So anyone that has recurring revenue streams, it's all about reducing something known as churn rate. Reducing expenses, I think, is quite an obvious one that probably a lot of people don't really do well. And then you have capital efficiency. This is how you use your money better. So if you can then reinvest your money back into the business to create new revenue and become more efficient, that's great. You should probably do that because that's your biggest bang for buck. But if you don't and you've got money sitting around, you better be doing something with it because it's withering away. So I want to go through a few examples actually, covering 3 of these elements, and these are also 3 elements that Breakout is developing products and services in. First is accepting crypto payments. You're probably thinking, well, why would I want to do that? So when you hear stories about people that, buy an expensive JPEG, and I'll come back to that, for $69 million, you're thinking, who would spend that amount of money? There are so many crypto millionaire and billionaires out there, you would have no idea. So for them, they're not spending a lot of money. They bought something at 5 cents, it's worth $3-4 grand now. It's peanuts. So these people are looking for ways that they can spend their crypto. They want to take it out to the traditional finance system through the bank, because that's dirty, right? They want to stay inside crypto, right? There's this whole new market, especially with the younger generation. So you need to start looking at, well, how do I reach those people? And accepting crypto payments is one way you can reach them and create new revenue streams from new clients you wouldn't have had otherwise. So this is one of the charts from, I think it was Deloitte that did a survey on kind of retail consumers. And here they're saying that there's 64% had a significant interest in digital currency, 32% moderate, and only 2% minimal. So the demand is absolutely there. This next one talks about sentiments around digital currency. So organisations that accept digital currencies currently have a competitive advantage in the market. 87% yes. Use of digital currencies for regular, everyday purchases will increase exponentially over the next few years. 85% yes. Digital currency will become legal tender in the next 10 years. 83%. Okay, so this is where the future's going. So if you're not adapting to this, you're losing pace. So one of the solutions that we're involved with bringing to market is a solution for allowing businesses to easily accept crypto payments. So how it works, you're at the customer or client, they will engage with your product or service platform, e-commerce, sales and marketing site, whatever it is. They'll be able to choose their products and services, and they'll just get a checkout form, just like a PayPal form or something like that, except it will allow them to either pay using fiat, so just a normal debit or credit card if they wish, or an approved crypto, so a cryptocurrency has been approved by the system of their choice. And at this stage, they'll also get an option to use a buy now, pay later feature as well, so they can spread that out over 4 months. And the cool thing is, well, that's pretty cool, but the next cool thing is the merchant actually gets a decision on how they want to receive that money as well. So do they want to receive the fiat money in their bank accounts, like Australian dollars to my bank account, or do I want to receive that in a stable coin? And there are multiple ways to spend stable coins. I've got 3 crypto debit cards, and a lot of the investing I do now is through that only. So that's one solution. Example number 2. So NFT 2.0. What the hell is NFT 2.0? Well, who thinks an NFT is an expensive image? Okay, yeah, a whole bunch of hands, cool. There wasn't many hands as I thought there would be, but let's just run with it. I'll get to NFT 2.0, but let's just run with that because I just want to articulate what the real value to NFTs are, and I'm going to use, digital artwork, I suppose, as an example. We'll just run with that theme. So let's say I'm a fantastic artist, which I'm not, but I would create a painting and I would sell it to you, sir, for $1,000. So I'd make $1,000, you would own the painting. You would now go and sell that to someone else later. I mean, let's say I became super famous. I became a very famous artist, hopefully before I died, unlike most artists, unfortunately. And if you've seen me even just write, you'll know that I'll never be a successful artist, as everyone keeps telling me I write like a 3-year-old. But let's just say hypothetically it was. You go and sell my artwork now for $100,000 to someone else. In the normal world, in the physical world, I know nothing about that. You get $100,000, I get nothing. Okay, this is where it all changes. In the digital world, I can encode a commission, a royalty, lifetime, multi-generational royalty into that digital artwork. So if you go and sell that NFT for someone for $100,000 and I've encoded 5%, I get $5,000 airdropped into my wallet, wake up tomorrow, bang, there's a passive income stream for the rest of eternity. So when I die and my value goes through the roof, my kids and grandkids get to benefit from that, okay? Mind-blowing, isn't it? All right, so this is why there's been such a push to this, okay? But let's talk about NFT 2.0. Let's get away from these images. Guys, I'm sure you guys know, you're smart business people, but consumer behaviour is evolving. People don't want to be sold to anymore. They want to feel part of a community. They want to feel like they're a part of it. They're valued and they get to make their own decisions. Now, NFTs can enable brands to meet the needs of this evolving customer. So create revenue opportunities, incentivising the customers and providing higher engagement or loyalty. So I talked a little about what NFTs are. NFT 1.0, JPEGs on OpenSea. OpenSea is just where you trade NFTs. NFT 2.0 is about assets with practical business use cases, okay? So NFTs as collectibles is just a starting point. But really the value is when they have practical use cases that can lead to positive and measurable outcomes. So NFT 2.0 is definitely the future. It's all about utility. So you'll be able to engage in customers in new ways, reward loyalty, incentivize and grow your community, eventually be able to create a metaverse presence, and then unlock real-world access to experiences, create new revenue streams. You can be granting exclusive online access to things, and also being able to tie physical goods to the digital world. So then if I was to sell a physical painting, I could give an associated NFT away way for that, which could be certification of ownership of that, or it could be a digital version of it as well. So there are multiple ways that this can be used. I know it's all conceptual at the moment because I could talk 2 hours just on use cases for this, but one thing is we are bringing an easy NFT platform to market here in Australia and New Zealand, and areas that it can benefit with, I've mentioned engagement and loyalty, exclusive products and experiences, social proof of attendance, collectibles and memorabilia, memberships, sponsorships, charities, not-for-profits. There's a whole bunch of different use cases. These are the main areas that we're focusing on, and we are looking for our first kind of reference clients in this space. So if any of this tickles your fancy, especially if you are an artist or a brand or a sports team or something like that, they're kind of the obvious ones, please come and have a chat to me. Finishing up on number 3, increasing capital efficiency. As I mentioned, if you could take the money you make and reinvest it into your business and grow that, it's usually the smartest thing you could do. If you've got money lying around, you better be putting it to use, again, because it's eroding away. Now, we approach the digital asset space or the crypto space or whatever very differently to what most people understand the space to be, which is a gambling, speculating casino, which a lot of people do that. And I've bought some of these meme coins and made a lot of money, but it's a very small percentage of my portfolio, and it's something that we don't really teach our members to do. The secret is taking traditional wealth creation principles from the traditional world and bring it to digital assets, okay? So bear with me as I articulate this. So in the traditional financial system, how do you build wealth? It's all about asset accumulation. You might be buying property, you might be buying real estate, you might be accumulating businesses, you might be buying dividend-paying stocks. You're accumulating assets. You're not buying and selling things, you're accumulating. Of those assets, you're looking to generate a yield or a passive income from that. Okay, if it's property and real estate, there's some kind of rental income or other types of yields. Businesses' net profits, dividend-paying stocks, you then earn dividends. You take that, you reinvest that, and you accumulate. That is the formula for creating wealth. If you've looked at any successful person, any very wealthy individual, that's how they do it. If they need to take any money out to spend, they'll take it out of their passive income, they'll take it out to the bank account, and they'll go and spend on whatever they want to spend it on. All we do is we take this and we apply it to the digital world. Okay, so in the digital world, instead of physical assets, you've got digital assets. Right? So instead of homes, you've got Bitcoin, or you've got other altcoins, or something that we call mirrored portfolios, or you have high growth projects with the potential blue chips of their industry that we can invest in now, own portions of it, and when they go up in value, we have capital appreciation, and there's a whole bunch of really cool stuff in DeFi around this as well. You're then looking to generate a yield. Well, how the hell do you do that? Something called staking, something called yield farming. You can be earning interest on those assets. DeFi protocols have various types of yields, very innovative stuff that we're working on. Real estate, so one of the projects we're working on in Sydney, they're actually connecting crypto to real estate, so you'll be able to basically use crypto to buy homes, you'll be able to leverage it as collateral to get a loan on your home. This is all very innovative stuff that is here right now, and we also partner with a crypto mining operation as well, where our members are earning a passive income in Bitcoin every single month, right? So a lot of different ways to do that. If we want to spend that, we don't go back to our bank account, we move that to one of our crypto debit cards and we go spend it. There's nothing that you can buy that I can't buy with crypto. So all this crap about you can't spend your crypto, that might have been 10 years ago, it's not now. Just finishing up, we are doing an event, it's on the pamphlets that you have, how to leverage digital assets to create 7 diversified passive income streams. And the key thing is, because I'm a busy person, I know you guys are busy, it's without spending more than 10 minutes a day to maintain. So there's a link there, you've got the flyer. If you do want to reach out to discuss, just breakoutsolutions.com, or you can look me up on Google or Linktree as well. So hopefully that's opened a few minds, and thanks for your time. Enjoy the rest of the day. Thanks.
Right. Next we have Alan Gattenby. Now, Alan is a leader among leaders. He's highly regarded for leading organisational and individual change at a global level. As an international